Hey everyone, welcome back to Corporate Decoder. Today, RMX Industries, RMXI, just filed a 1-for-3 reverse stock split. And here is one critical red flag most investors are missing. Quick note, this is not financial advice, just my take on public filings for educational purposes. This move is often a sign of trouble. And the reason why they are doing it is actually quite telling. Alright, let's dive into this filing for RMX Industries Inc. It's an 8K, which means it's reporting a significant event. The event we are looking at happened on the 22nd of July, 2026, when RMX Industries officially decided to enact a reverse stock split. First thing to note, RMX Industries is identifying as an emerging growth company. This means they are generally allowed some flexibility with financial reporting rules, and it often applies to smaller, newer companies. Now, the main reason for this filing is a material modification to the rights of their security holders. In simpler terms, they are changing something fundamental about how their stock works. This modification is happening under the section that deals with changes to their articles of incorporation or bylaws. Specifically, it's about a reverse stock split. So on the 22nd of July 2026, RMX Industries, a Nevada-based company, filed a certificate of change to perform a 1-for-3 reverse stock split. This means for every 3 shares of common stock a shareholder owns, they will now only have 1 share. This change officially goes into effect on the 24th of July, 2026. Before this split, RMX Industries was authorized to issue a massive 200 million shares of common stock. That's a lot of potential shares floating around. After the split, the number of authorized shares will decrease significantly to about 66.7 million. They are essentially consolidating their stock. They are reducing the number of shares actually held by investors from about 30 million Class of shares down to just over 10 million, and from 1 million Class B shares down to about 333,000. Remember, this does not change the total value of your investment, just the number of shares you hold. Here is the crucial part, the reason they are doing this. They say it's to improve marketability and liquidity by increasing the stock price. This is the classic reason companies give for a reverse split, and it's almost always because their stock price has fallen so low that it's in danger of being delisted from major stock exchanges. Think of companies like Kodak back in 2021. They did a similar significant reverse split, and historically, about half of these microcap reverse splits end up with the stock eventually being delisted. If RMX Industries stock was trading for, say, less than $1, this reverse split would bump it up to around $3, making it look more respectable and avoiding the exchange's low. Price warnings, and a quick operational note, they are not issuing fractional shares. If a shareholder would have ended up with a fraction of a share, they will be rounded up to a whole share. This is a common practice to simplify the process. All warrants and other derivative instruments will also adjust automatically. Moving on, the company also used this opportunity to announce other related events. On the 24th of July, they released a press release formally announcing this reverse split. They also sent a letter directly to their shareholders to make sure everyone was informed about the upcoming change. Now, every filing like this includes a section on forward-looking statements. This is essentially a disclaimer. They are talking about future expectations, but they are cautioning investors that actual results could be very different due to various risks and uncertainties. This is standard legal language, but it highlights that a company's future performance is never guaranteed. Things mentioned here like may, will, believes, and expects are all keywords that indicate these are predictions and not certainties. Finally, the filing lists the exhibits that support these announcements. Exhibit 3.1 is the actual certificate of change document that was filed with the state of Nevada. Exhibit 99.1 is the press release they issued announcing the split. And Exhibit 99.2 is the letter sent to the shareholders. And finally, Exhibit 104 is the interactive data file for the cover page, typically used for automated data processing by the SEC. The report is signed by Carl Kitt, who is listed as the Chief Executive Officer and President. Looking at the broader context from recent news, RMX Industries recently extended a convertible note maturity, which often means they are struggling to repay debt. They also appointed someone to their advisory board. Their market cap is around $57 million with a current stock price of $6.51. But that's after the reverse split is factored in, so we'd need to know the price before and after to see the real impact. Historically, companies doing this often see continued downward pressure on their stock price, so while the goal is to boost the price, it doesn't always guarantee long-term success. The risk I am watching is whether this reverse split is just a temporary fix or if it is part of a larger plan to turn the business around. My biggest concern is that this move often signifies a company struggling to maintain its stock exchange listing. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis valuable, hit like, subscribe for more, and join our Discord community linked below.